Is it possible for a non-U.S. resident to pay zero tax with a US LLC?
Great question. And in many cases, yes. If a non-U.S. resident has an LLC in the U.S. and does not have a nexus, which is a physical connection to the jurisdiction, like an office or a shop or something like that, and they don't have employees where the operational activity of the business happens, if they don't have those things and they operate purely virtually, maybe they do have some 1099 contractors in the U.S. or contractors outside of the U.S. Having 1099 contractors in or out of the U.S. does not constitute nexus or what's called ECI, or effectively connected income to a trade or business. As long as you don't have nexus or ECI, the business itself doesn't have a tax obligation. You personally, you might have a tax obligation somewhere based on your personal situation. Some examples where you might have a tax obligation in the U.S., or you will have a tax obligation, would be if you had a business with a physical office. Maybe you did physical work in the U.S., I don't know, like a plumbing business or some service-related business where you're physically doing the work with employees in the U.S. You have an office with a staff. Let's say you had a software company, but you had an office and all your development team worked in an office in, let's say, Austin, Texas. The operational activity of your business happens in the U.S., and you will have a tax obligation on that business. If you have an e-commerce business where you're selling physical goods inside the U.S. to U.S. customers, you will have a tax obligation in that case because there is a specific provision for non-residents selling goods into the U.S. It's based on who is buying the goods, and if it's U.S. persons in the U.S. buying the goods, that creates a tax obligation. So even if you don't have an office, you operate completely virtually, and you have an Amazon store, and Amazon does all your fulfillment, you would still have a tax obligation in that case. Situations where you would not have a tax obligation would be if you're doing some type of consulting or coaching, you're selling digital products, maybe you have a software business selling SaaS products. Let's say you had an event business, and let's say you ran 10 events a year, and let's say 8 of them were in Mexico and 2 of them were in the US. If the operational activity of your business, meaning the organization of the events, the management of the business, the marketing, all of that happened outside of the US, meaning you or your team is not physically in the US when that happens, that would constitute non-US income because the actual operational activity happens from outside of the US. If you did 1 or 2 events in the US, that wouldn't be enough to trigger a taxable event. But if you did all 10 of those events in the US, then that would be enough operational activity happening in the US that you would now have a tax obligation. There's a fine line there, how much of your business happens outside of the U.S., the actual operational activity versus how much of it happens in the U.S. But there's a lot of examples. Let's say you have a digital marketing agency, your team is outside of the U.S., or you have 1099 people that are in the U.S. That wouldn't constitute operational activity in the U.S. Let's say you did affiliate marketing, everything is on YouTube, and your business is registered in the U.S. and your bank's in the U.S., but you actually do the work of your business while you're outside of the U.S. That would not constitute U.S. activity. In most cases, virtual businesses would not have a tax obligation in the U.S. for non-U.S. residents running a U.S. LLC.
Is it possible that the non-U.S. resident pays no taxes globally?
So it depends on the individual themselves. There's a lot of variables that go into that. The citizenship of the individual, the physical residency, the tax residency, family status can even matter. For example, in Canada, you can't give up your tax residency if you're married and have kids, live most of the year outside of the U.S. as you as an individual. But you personally spend, let's say you have a house in Mexico, and you spend most of your time outside of the U.S., but let's say your spouse and your kids, your spouse is still in the U.S. and has a job, and your kids still go to school in Canada. Even though you don't spend most of your time in the U.S., you would still be a Canadian tax resident. Even though you run your business through the U.S., you would still have a Canadian tax obligation because you're still a tax resident in Canada. So it depends on the individual situation. There's a lot of nuances there. Finland has a 4-year rule. So if you're Finnish and you exit Finland, from the date you exit for the next 4 years, Finland considers you a tax resident of Finland. You may never go back to Finland again, but for the next 4 years, they consider you a tax resident unless you can prove you got tax residency in another country and you're filing and paying your taxes in that country. In contrast, if you're British and you leave the UK, there's literally one form you file with the UK to tell them you're gone, and that's it. You're done. You're not a tax resident anymore in the UK. So it depends on your nationality. It also depends on if you have physical residency or tax residency in another country. So there's a lot of variables. It is very possible, but some nationalities are harder than others. Americans, on the other hand, are always a tax resident, but there's a lot of loopholes. But non-US people, most countries, there is a way to give up your tax residency in your home country. There are a few of them that are more difficult, like Australia is more difficult. The Scandinavian countries, Finland, Norway, Sweden, they're more difficult. All doable. There are ways to do it and basically live tax-free, but it's a lifestyle choice. Even the Finnish person, maybe he would have to move somewhere, like, I don't know, let's say the UK for a short period of time to prove tax residency in UK so that Finland would kind of release him. And then he could go kind of on this nomadic life journey, let's say, and not have tax residency anywhere, run his business through a US LLC and be completely tax-free. So it is possible for a Finnish person. They just have to jump through extra hoops. Whereas a British person or a German is super easy. All they have to do is deregister with the municipality where they live and leave the country and stay out of the country the majority of the year, and they're no longer a tax resident. Super easy for Germans. Unless they have a German registered company, then it's a bit more difficult to get rid of the company, but that's a company issue, not an individual. Short answer is yes, it is possible for non-US digital nomads to run their business through the US and be completely tax-free, but they just have to be sure they've properly exited their home country as a tax resident, and they don't become a tax resident either by intention or by default in another country, if that makes sense.
If you're looking to form an LLC, especially if you aren't currently living in the US, we recommend working with Business Anywhere to create your LLC. If you use our link in the description below and enter the code BEGIN15 at checkout, you'll save 15%, excluding the state fees. If you want to see the step-by-step process of creating an LLC with Business Anywhere, watch this video right here, and I hope to see you in another video. Bye-bye.